You don't have to live where you invest. So if you're interested in out of town properties where you don't live, if you're interested in how to do it safely, securely, and bust through some fear, pay attention. This video will cover all. Hey guys, how you doing? I'm Russell Westcott. I help real estate investors start, grow, and scale the real estate investing portfolio of their dreams. So you're interested in investing in out-of-town properties, maybe where you live, maybe the prices are too high. Maybe the landlord and tenant governing bodies are just unfavorable to landlords. Maybe there's an outflow of migration, a decrease in population, a lower wage than other marketplace. Maybe just where you live, just the rent to price ratio just does not make sense. And you've been looking to invest in out of province, and you've been looking to invest somewhere other than when you live. Now, I have conversations about this all the time. See, I invest in a market outside of where I live. I live in the suburb of Vancouver. The marketplace out here for the type of properties that I'm looking at just doesn't make sense. So I look to another market to invest. So what we're going to do in this video for you, and we're going to dive headfirst and we're going to go deep into the whole strategy about how to invest from another province. How do you do this safely? How do you do this securely? How do you build a team? How do you make sure that you have all your I's dotted and T's crossed? Now, I invited my good friend, Mr. Jason Mattern from Tri-Urban Real Estate back again for today's interview that you're about to see. It's also in podcast form, so if you don't like to watch a long form video, it's also in podcast as well. So we go really deep into the how-tos here. We go a lot into the tactics of how to do this. The other thing, there's some other themes that we cover in here as well, and that's about, how do you start building a team? Eventually, you need to transition from a one-person operation, the old lone wolf. Oh, no more lone wolves. We need to start transitioning into building a team to be a business owner. Those are some big themes that we cover here too. The other is, how do you work with a realtor? As you will find out very clearly and very quickly, Jason Mattern, the person I'm interviewing, is my realtor. He's a business partner. He's also an extremely good friend of mine. You will find out how you can start delegating the sourcing of properties. Like truly, let a professional go source your opportunities. You need to stay in your lane and focus on what you do best and have the experts do what they do best. Find your properties, bring you good deals, and then you just close on them. You're going to have enough things to think about on a day-to-day basis without having to go out and hit the pavement and find all the properties you want. As you will encounter and what you will see in this video, Jason is a pro at this, and he is a fantastic resource. One final note that you will find in this presentation, Jason and I talk an awful lot about the Edmonton marketplace. I don't have an attachment to where you invest. I don't have an attachment to the type of properties, the real estate investment opportunities that you look at. What I do have an attachment to is that you know why you invest in that marketplace, that you've done the research, that you've taken the time to get detailed in your analysis on why you invest in that property. So everybody, I sure hope you enjoy this upcoming interview. And with all that being said, let's jump right to it. Please help me welcome Mr. Jason Mattern. Hey, Jason Mattern, welcome back to the show today. How you doing, Jay?
Hey, thanks for having me back, Rusty. Yep, doing well.
All right, guys. So we're back here, Jay. This is episode number 3. So I think people might start talking about this or something. Might start talking about us. You and I having all these podcasts and videos that we're doing.
Well, you know what? I think I'm getting comfortable with it, Russ. I know I've said right from the start it's something that was a tough nut for me to crack. I'm not that public guy. I do not like being front and center. And I think having a relationship on the other side of the screen helps, obviously. That's someone that I know and trust as well. And it just boils down to, I think, getting past that and being able to help people. And again, it's an opinion, right? Yep. If I can deliver information, everyone still has to make their own opinion, but I can give information on how we do things and handle things and look at things on this side. And at the end of the day, everyone can do what they want. Yep. It's just fine.
Well, let's put it this way. These conversations you and I are having are conversations you have, multiple times a day. And after they add up over a week, you have like 20 or 30 of these conversations. So we're just distributing the message a little bit more, aren't we?
Yeah, I think it's, for all intents and purposes, it's easier to maybe have a larger audience and maybe answer some of the questions before even getting to a consultation. And I think, again, being a real estate investor and boils down to getting the information that you need to make an informed decision.
Yep.
And really this is maybe the leading edge to that, of maybe piquing interest and answering some questions, and at the end of the day, see where it goes, right?
Yep. And this is just 100% educational, and there are no obligations any way, shape, or form to purchase anything or not. We're just trying to provide the information and knowledge for you to make the decision that's right for you. Now, speaking of that as a context, today's context for our conversation is you don't have to live where you invest, okay? But it'd be great if you could, but sometimes you don't have to. As a matter of fact, I know many people throughout the years that have never bought a place where they've lived. Maybe the economic fundamentals, or maybe the fundamentals or the rent ratios or the price ratios just don't make sense for you to invest in your marketplace. So we're going to talk about out-of-town investing. Now, here's the cool thing about this conversation. We will be referencing a lot to Edmonton because that's where I personally invest, and that's also where Jason is from. Now, here's the thing. What we're talking about here is universally applicable. Even if you lived in Victoria, British Columbia, and you wanted to invest in Kitchener, Waterloo, Cambridge, in Ontario, what we're going to talk to you about investing out of town universally applies across the country. But we are going to go deep into Edmonton because that's the market we're both very familiar with, but you can apply it to the market that you choose to go into. Does that sound fair, Jay?
Yeah, you bet. Yeah.
Now, before we dive into it, Jay, I just want to get some context and for some people to understand. So over the past interviews we've done, you've shared approximately about 2,000 deals you've transacted over the last 20 years. You've transacted or helped investors transact about 500 new construction homes. What would be your best estimation of the percentage of your clients would be out-of-town people? What would you say would be the best estimation?
Percentage of out-of-town customers?
Yes.
Oh gosh, I would say that's at least over 80%. Okay. The majority, Russ. Yeah, it's really, again, something that's we built our business model around, is catering to out-of-town investors, and we'll dive into it some more, but. Yeah, it's a lot, and there's a lot of uncomfortableness around it, I think, in a market situation where we're at, where people are looking to Edmonton as one of the places to invest, and there's a big hurdle. Everyone looks and understands the information and the properties and sees the pro formas and everything we talk about, but there's that big, gigantic step to actually pull the trigger investing long distance, right?
Yeah, absolutely. It's funny. I'm actively seeking money partners all the time and co-owning properties with people. And one of the big questions I have up front for people is, do you feel comfortable investing outside of where you live? Because if the answer is no, then then let's talk about something else, right? The other question I ask very clearly is, do you feel comfortable co-owning with somebody else and having somebody else potentially make all these decisions? And they have to say they feel comfortable with both. If they don't feel comfortable with both of those, that's fine, right? I don't have an attachment that we work together. I just have to make sure that I want to present something that fits for them. So suffice it to say, Jay, you've been around this. This isn't your first rodeo. You've been around the block of helping people from out of town invest in properties in Edmonton. Let me ask a question. Are there some of your clients that you've never met over the years? Like face-to-face person?
There are some that are in the acquisition stage that I have not met in person yet. So acquisition stage meaning they've got a property being built and they've bought it without being in Edmonton, but I have not met them yet. Now, I don't know if there's any customers that I have not physically met, but sometimes it takes a year or two or three.
Yep.
And again, that's having the system to accommodate their needs in a transparent way where they can follow along and keep in the loop is part of what we do on this side.
Yeah, but you've probably have, over the point process of owning the properties and the transaction, you've met every single one of them, and you had the chance of breaking bread and having a beer and shaking your hand and having that experience of shaking Jason's hand.
Yeah, I think so. For the most part, I've had a chance to meet everyone, and if I haven't, I don't want to single anyone out. But for the most part, it happens. It just takes time, and it's not only upfront. I mean, a lot of long distance investors will come back once a year and do a walkthrough of their properties, which I highly recommend, and we can talk further on that. But again, I got friends coast to coast, and these relationships, they start as, okay, hey, I want to invest, and how can you help, and but they really turn into long lasting friendships, and it's pretty cool to have that across the nation for sure.
Now, do you save the antique tractor rides just for the special select few?
No, heck no. Anyone wants an antique tractor ride, I'm game anytime.
Now, just if you guys are maybe tuning in to your first episode, Jason is you have some antique tractors, don't you? That's part of what makes you tick.
I think so. I'm a collector, and I mean, everyone's got their poison, right? And I collect old stuff. I got some old vehicles and old tractors, and it's just amazing to me how these were everyday tools back then. And I got some stuff that's 80 years old, and we still use them. But it's amazing to see how the world has evolved.
Yeah,
for sure.
Well, it's interesting, and I had the joke. Here, city slicker Russell over here. I'm born and raised Saskatchewan, small town. I'm born and raised smaller place than you or Jay, but I've been away from Saskatchewan for better part of 30 years. So I'm out on the ranch. Jason got the nice shirt on, and we should get the picture. We should find that. I think it was even a pink shirt at the time, sitting there on the old antique tractor driving. We should shoot
that you were wearing, by the way.
That I was wearing. Yeah. We should shoot a picture of me trying to start, or shoot a video of me trying to start that antique tractor.
Yeah, that would be funny. That would get lots of views for sure.
Yeah. Thanks, Jay. I actually had to turn my Saskatchewan card back in. I had to turn my Prairie card back in after I failed that test. I officially became a city slicker at that time.
Yeah. Nor are you allowed to drink Pilsner beer anymore. So there you go.
Well, but I can still cheer for the Rough Riders, though.
There you go.
All right. So imagine we've just lost everybody watching or listening to this episode and going, "Oh my God, Jason and Russ are talking about prairies again." So guys, that's what it's about. It truly is. Real estate is about relationship. It truly is. And that's a key point that I want to make about investing out of town is you need to have a relationship with a person that's on the ground. And you need to have a good relationship with the boots on the ground. So that would be tip number one, is that you need to have a good relationship. All right. So go ahead, Jay.
Well, I couldn't agree more. And I think that I'll just mirror that comment, Russ. Anytime or if anyone is looking to invest long distance into another market, the relationship is key. You have to be able to trust that person. You have to be able to like that person. It's typically a long-term relationship, and you have to, understand that these people know what they're talking about, can give you what you want at the end of the day. But, and it's no different than anything else. It's real estate, but if you're going and have a stockbroker or a banker or whatever, these people are making financial decisions for you, and it's no different for us. We're in a lot of cases, the eyes and the ears and the boots on the ground on this side. And, we've predetermined properties for investors already. It's not that you're going to come to us and look and say, well, here's a blanket situation of properties to look at. No, they're pre-screened. In some cases, years in advance, dealing with land developers to get them to the front lines. They're pre-selected, pre-screened. But again, that relationship of just being able to trust that person that's delivering that info, and you're going to have that relationship with, right?
Yep. And that's actually one of our intentions that I want to have of doing this series with you, is if people are coming to Edmonton, is for people to get to know Jason. I'm a firm believer. I 100% recommend you are my go-to property source in Edmonton. You are one of my best friends, but I want people to get to know you, and I want people to like and trust you like I do. And then what they can do is they already have a little bit, they might know more about you by the time they come to even visit you, Jay, than you're aware.
And that's great. Then I won't stick out like a sore thumb when I've got my John Deere shirt on and hat and and wearing blue jeans. At the end of the day, I'm me, Russ, and I don't sugarcoat that. I feel comfortable in a golf shirt and blue jeans, and that's typically what I wear every day. And again, it goes to the relationship and the individual, right?
Yeah, I wish I could probably pull this picture up as quick as possible. I can't quite find it. So this is typical Jay. So for when Jason phones me on my phone, Jason sent me a picture of him out by a field, John Deere tractor on, and a piece of wheat wheat hanging out his mouth, and that picture pops up every time the phone rings, and it's from Jason. That's typical you, isn't it, Jay?
That's who I am. I'm operate at a little slower pace when I'm not at the office, and I prefer the country life for sure.
Yeah, nice. Okay, guys, let's just get right into it here. So I'm going to break this conversation up into what I would call the three phases of out of town real estate investing. Okay. Phase number 1 is going to be acquisitions. Phase number 2 is going to be like ownership and management. And phase number 3 is going to be selling or divesting. Okay. So each of those 3 phases could be another entire hour conversation in and of itself, but we're going to try our best here, Jay, to cover all 3 of those phases. And if we need to go deeper, guys, leave us a comment, send us a note, and we'll go even deeper onto one of those phases. Okay. So let's talk acquisitions first. Okay. So what is a person first? So let's say somebody's watching this. They sit there and go, you know what? I've heard about this Edmonton. It kind of sounds interesting. I'm going to do a little more digging, a little more research. And they've made a commitment that they're more than just a tire kicker. They are sitting there. I'm serious, and I'm serious about looking at Edmonton. What's kind of the first step that somebody would probably do?
Well, I think is just reach out and, we have a conversation. I would say 30 minutes, inside 30 minutes. And really, what I would like to do is just understand them. I want to understand, where real estate fits with them. Is it long-term wealth? Is it they want to do flips? What's the end goal that they're trying to reach? And I want to understand their current lifestyle. I want to understand how much time they have to put towards this. If they're long distance, they're probably most likely going to be using a property management firm. That's great. We can recommend trusted relationships on the ground on this side for that. But once we have that information, Russ, or I should say, once I have that, I can confidently, recommend property types. The last thing we want to do, and we've seen it happen before, unfortunately, is that people buy a property that looks good on a pro forma, for example, and they buy it and it takes more time and management than they actually have in their life based on business or family or whatever else. But the last thing we want to do is help someone acquire a property that's not going to fit A, their long-term financial goals, or B, it's not going to merge into their current lifestyle and actually be a contributor to their lifestyle versus a burden.
Yep.
Right. And there's, really, there's probably 3 or 4 quick questions we can talk about and determine that and go from there.
Yeah. Now, I'm sorry if I'm going to jump into the controversial end of the pool here very quickly, but that's fine.
That's fine.
It's our opinion. Jason, the opportunities and properties you recommend people, would you own them yourself?
That's where it started, Russ. So the answer is yes. And again, I think we talked about this or mentioned this in a previous video, that I would find it hard for anyone to sit in front of a customer and ask, for business and trust if you're not in the game and doing this yourself, or use the relationships that we're going to put in front of you. That's an absolute yes. Would
you have a hard time putting a property in front of a client that you would not invest in yourself?
I wouldn't do it. Russ, I just wouldn't do it. It's now on that note, there's a lot of people that cash flow talks. Let's face it. When everyone looks at pro formas and we send our menu out of properties that have pro forma, everyone zeroes in on the cash flow numbers, and that's fine. But there's a big difference between some asset classes in real estate and homes with secondary suites and without, and some require more time and more management. And if you're not willing to put that time and management into it, it's probably not for you. Some people have more time, Russ. Some people are coming in and looking for, benefit of real estate 15 years down the road, and that's fine. Cash flow is not as important. They still have a good job or business and producing income. They're not looking for income replacement. So maybe a property with a little less management and time is better for them. But at the end of the day, all I can do is I can sit here and I can say, okay, here's this property. Let me put it this way. It's not sometimes what you can see on the pro forma or the information that we present. It's sometimes the stuff that you can't see. And sometimes that stuff that you can't see doesn't happen until you actually pull the trigger and own the property and figure out 6 or 8 months later that, this property's taking up a little more time than I thought, or it's costing a little more money, or it's having more tenant turnover, or the flip side. Holy cow, this is easy. Let's buy another one, right? Yeah. But it's all just really understanding what that person and their family are trying to accomplish. And I'm here to help, but only if they want it. Right?
Yep. Now, there would be some areas within Edmonton that you wouldn't invest in, would there? Would there not?
There's a lot of areas I wouldn't invest in. I mean, we kind of start on the front side and looking at tenant profile of who we want to have that long-term tenant relationship with, and kind of reverse engineering it from there. And and finding the right area and building the right property that will attract that perfect tenant that you want. And everyone's different. I mean, the desired tenant profile that I like, it might be a little bit different. Now, you also need to understand the properties themselves just inherently will attract a different tenant profile. And all I can do again is say, okay, you know what? We have sold, literally hundreds of these and hundreds of these. And here's the feedback, not only from the owners, but from the property managers and the tenants of what everyone liked and didn't like, and time and money and all that sort of stuff. Right?
Yeah, absolutely. So, okay. So they've reached out, they've had the conversation. It sounds like it's a fit. Okay. So let's just maybe just kind of do this as you and I've had this conversation. I'm interested in moving forward. I actually have some capital, and I actually have I can qualify for a mortgage. So, or let me say I'm not clear if I can qualify for a mortgage or not. It's where a lot of people typically are, is they're just not 100% sure if they can qualify. Okay. And then, you know what? I'm interested in this. I've heard about it. What's the next step that you typically do when you see that there's a fit for me?
I think just kind of lining up the relationship, so to speak. So everyone investing in real estate, especially long distance, you need, I'll call it a power team, but you need your trusted power team on the ground. Right. And that includes a mortgage broker, that can include a property manager, an insurance provider. There's going to be builder relationships. There's going to be, contractor relationships, service providers, all that stuff. So just understanding where they're at. A lot of people come to us and they already own real estate in different sectors or different areas of the country, and that's fine. And if they have service providers on that end that they want to use, great. If they don't, we can certainly introduce them to, trusted relationships on this end. And these, again, relationships like the properties, these are people that I use myself. I know, I trust, and I know they're going to put, our customers' best interest forward and help them get what they want.
Yep.
Now, most importantly, these people, they're familiar with our process here at Tri-Urban and, the product that we provide. And I think they're, I've heard it that they love what we provide. They love the properties, the properties that we give them. It's easy for the property managers to rent and run a nice, efficient business for ultimately the investor. Right.
Yeah. So you really do kind of have like a one-stop shop of the team and people in place. But by all means, if you want to use your own people, use your own people. But one thing we've been found, and I may get in trouble now, guys. I'm going to put a disclaimer on this next statement. I'm going to talk a little bit about the mortgage broker that you use, Jay, and I'm going to talk a couple stories here. But guys, don't say, well, Russell said this person's going to guarantee me. No, I did not say that. I'm just going to tell you some stories that have happened of people that have gone to Mike, and some other people would not even submit an application for them based on things because they maybe had 5 places, they may have had or whatever. Send them over to Mike, and he understood the properties, and he was able to get them financing, was he not?
And probably, most of the circumstances, I don't know what the percentage is, but I can't recall a deal where we has not been able to, make that happen. And, maybe it's, some of the old story of not what who maybe. I mean, he's well connected. Now, he understands what we're trying to do. He's an investor himself as well. And, he's the founder of a mortgage franchise himself. He owns a local bank. So, he's well connected. And at the end of the day, I think how you present the deals to the lenders, so to speak, and how you highlight them will determine if there's approvals or not. Yep. And I don't know how he does that. I just know, he's a good guy. He's a country boy too. And he's one of us. He's normal. He's not out for anything else, but just to help people along the way. He's got an amazing business. Yep. He doesn't even need to take our referrals, but I mean, he legitimately, is one of us. He really wants to help.
Did I hear you correctly? We said he owns a bank.
He owns a local bank.
He owns his own bank. So that's the kind of guy I want to be talking to. Now, So here's what I'm going to say, guys. If you are watching this or listening to this, and if you'd like me to maybe interview him and talk to him and find out what the secret sauce is, or if there's something, by all means, leave a comment below, or wherever you're listening or watching, leave a comment, and I'll see if I can round him up to see what the dealio is there. So team member. So now you've connected me with some of the team members. Maybe I've got a mortgage consultation. I've talked to the person you've recommended, and they say, you know what, I don't see an issue with going forward. Good. Now, do I hop on an airplane and come out, or what's the process after that?
You know what some people do? You're welcome to. I mean, with today's technology, Russ, we can do a lot of this stuff over the internet. And, for most of the bills and the floor plans and stuff that we're looking at, we've built several of them already. So a lot of times we have a virtual VR tour that we can share. We've got a ton of photos that we take. We've got floor plans, black line drawings. So, there's developer maps. So, and then really kind of tying that to a little bigger picture of, in Edmonton, where these properties are and understanding why. Why are we looking at this specific neighborhood? Well, it's probably not looking at it today. It might be looking at it 2, 3, 4, 5, 10 years down the road, and understanding those economic fundamentals in the Edmonton area that are going to produce the jobs and where. Yeah. Where are the transportation changes coming? Where are the commercial amenities, the schools, and all of these sort of things? These are places where, where our tenant profile is going to want to live. Yep. Right. So it makes it easy again to reverse engineer the area and find that property to attract that perfect tenant profile.
Yep. Now, I'm just going to give you guys, here's the tip that has worked best for me. Now, just for context, if some of you don't know who I am, I live in Vancouver. I invest out of town. Okay. So I'm actually a client of Jason's and good friend and business partner. And we're just really good friends. And you have a good property source. That here's the words that come out of Jason's mouth. When I tell him, Jason, I've been out lining up some capital. I've got some new money partners. We're ready to move forward. The words out of Jason's mouth is how many and how soon, right? That's what when you have a good source of properties. When somebody's sitting there going, how many do you want and how soon do you want them, right?
Yep. It's a lot of people have that. I'll say expectation of us. We've got, of course, real estate investors are not typically coming to buy one property. And here, let me summarize it this way. Russ, if I can take all of that acquisition pain and management off an investor's plate, and I can let you guys focus on really attracting capital. Now, whether that's your own capital and you're organizing and you're getting mortgages, or you've got businesses and you're, or professional corporations and you're creating your own down payment, focus on that. If that's how you're creating capital, if you're using joint venture relationships and you're presenting the joint ventures, we'll help you with that. We've got a lot of information that we can help you and supply you that you can put into your package, so you can present. But long story short is, if you do what you do best, and that's go raise capital, however that be, whether business or joint venture, let me take care of the rest. The property acquisition, our process really covers it from tip to tail when we say acquisition. And including all of those relationships along the way that you're going to need. And they're introduced in a proactive manner. And the whole name of the game again is to, engage the investor into an online process that they can follow along and know who's holding the ball and keep it accountable and make sure they get what they want. Yep. Right. Yep. It's not about me. It's not about relationships, and everyone's different. Everyone wants different stuff.
Yep. And if you guys are interested in learning how to raise some capital, I know somebody that can probably help you out with that. Yeah. And for those of you on the podcast, I'm winking with that. So, Okay. So we've qualified. Looks like we're good to go. So, and we maybe have decided that here's the tip I'm going to offer you guys. You don't have to fly out there yet until I recommend you actually get an offer accepted with conditions before you actually book your plane ticket to go fly out. That's the strategy, and that's the process we're going to go. That's kind of been the process that's worked best for people. So Jay, walk me through. So we've qualified. I'm interested. I'm committed. Do you send me some options, or how do we work together on that?
Yeah. So basically, based on our conversations thus far, we've zeroed in on a property type, I'll call it.
Yep.
So the asset classes to me would be single family home. So single family home is a house that's only going to accommodate one tenant. It's typically a standalone house or half duplex model with an unfinished basement, but the tenant is going to rent the whole unit. Okay. The next asset class would be what we would call a suited home. This is adding a secondary suite into the lower level of the house. The third asset class would be a garage suite. A garage suite is now taking the secondary suite and putting it up above the garage. These things are getting popular. The next would be side-by-side duplex, complete side-by-side duplex with lower secondary suites or not. And then we get into, multiplex buildings where, we're getting as many as 8 rental suites under one roof. Once we understand the asset class, A, that fits your budget, and B, that fits your lifestyle, now we can start throwing options in front of you in those specific asset classes.
Yep.
Because the options are, there's floor plan options, and there's actually area options within the city with our different developer and builder relationships, And then we have information that would support, or we can give the investor regarding each of those, and ultimately they can make an informed decision from that.
Yep. Okay. So essentially, you start sending me. Let's hone in on just one, example. Let's say I'm interested in a garage suite product,
Okay.
and a little birdie told me that you have 5 of those. How many do you have? How many access do you have some garage suites right now, Jay?
There's only 5 left, and they're a great option, by the way, good choice, but they're rare to come across.
Yeah.
They're based on municipal bylaw and where we can build them.
Okay, so I'm interested in garage suite. What do you send to me? So we do this by email or jump on a Zoom. Like, what do you send to me for me to take a look at?
We can do either. I'm glad I'm not the only one that's sometimes not technology savvy and doesn't do a Zoom meeting. But hey, I've learned how to do that. We can certainly hop on a Zoom conference and go over information. But the first step is to send you, numbers. We're going to look at floor plans, different options of that. And then once we've kind of zeroed in on that, we're going to look at what we'd call a build summary. So a build summary would be a detailed line item of the actual build, which would include the land value, the model price, all of the options.
Yeah.
Now, each one of them is going to have a little bit different options based on the builder we're probably going to be introducing you to and looking at, because all of their specifications and their inclusions are all a little bit different. All of their option pricing is all a little bit different. But at the end of the day, we'll build all that for you and you can sit and look. And once you have that price, now we can overlay that into, I call it an IPA, an investment property analysis, to where we can look at the associated performance numbers.
Yeah. So you present me the pro forma, you present me the model, you present me some black line drawings. It's actually a really, really informative package. Now, I'm interested. And then do you go out and you fully price it, or how is the process from here? Do I write an offer? How does this go?
Yeah, that's part of that build summary, Russ, is that, because a lot of the lot locations, and you guys have heard me use this, many times, is I like to cherry pick them in advance, right? And yes, I put little stickies on developer maps and keep track of them that way. But, a lot of the areas that we're focusing on, and when I say areas, I'm talking the quadrant, the community of the Edmonton area, and then, taking it right internally into that subdivision of that development and cherry picking some of the lots that are in that development that will work best for a grad suite plan, or that will even accommodate a grad suite plan. Now, when we're building it and pricing it, like I say, sometimes the lots are a little bit bigger or smaller, or sometimes there's a pie lot in the back, and sometimes we can add extra goodies that will contribute to more income, like an extra cement parking pad, for example. The lots are all a little bit different size, so the fencing by linear foot is always a different cost. So anyhow, where we're circling around to is just put that in a build summary for people to basically look at. And that's pretty much, I'm not going to say written in stone, but once we get into the offer process is where we can see things actually maneuver a little bit. But that build schedule that we're going to build up front is going to be within $5,000, give or take, every time.
Okay, so you essentially build out a price sheet, and I'm presented with something, and I do my final analysis and numbers and things like that. Then do we go and, do we do the traditional offer Do we put it on the area contract and form and negotiate, and then you take it to the builder? Like, what's the process of the offer process?
Yeah, so the offer process, touching on the area contract, is the Alberta Real Estate Association contract, sanctioned contract. So we use those. We do have, because this is new construction, this is different, folks, than buying a resale home. There's a lot of variables in new construction that need to be included in your offer documents for your protection. And again, I've said this before, but using a builder contract, I would never do it for any of our customers. We don't recommend it. The builder contract is exactly that. And it's no disrespect or anything intended towards a builder. That's their contract. That's what they use. I represent the buyers, right? I represent the investor's interest, and it's my job to make sure that transaction is airtight for the investor, right? So, past that, everything can be handled online, with online signing. The negotiation handles, with the builder on this side. I'll present the offer to the builder, and you know what? They typically get negotiated. Start low, and really just get the best deal we can. I mean, each builder operates a little bit different with their discounting structure and stuff like that. But, that offer's got to be negotiated. And then we would have what would be called a pending deal, a pending conditional deal, which is, most often going to be subject to financing. And it's also going to be subject to, the investor's review and acceptance of the build plan specifications, as well. So during that time period, we're going to get a chance to not only get the financing rolling with the mortgage broker and get everything taken care of there, which we've already, preset that relationship and the expectations there. But we're going to start taking those next steps with the builder and start zeroing in on a plot plan, where we can move the buildings around on the lot, where we can look at the actual linear footage for fencing. We can look at coverages and see if we can get extra sidewalks or cement driveways. With that, we're also going to get a set of actual build plans that we're going to be able to look at. And in some cases, some builders will allow us to make, small changes. Some won't, but at the end of the day, we've had an opportunity really over years of relationships to kind of put our footprint on some of these floor plans with recommendations from owners and tenants alike. And so the floor plans we're going to be seeing are vetted, so to speak. They work, they're deployed, and they just continually get better. Yeah.
So in essence, this isn't really just kind of any off the rack kind of a thing. It's like there's good part of it set, and the plans and the build plans are the build plans, but there are some customizable things we can do to them, can we not?
Well, it's more, the plans themselves, Russ, are good. And at the end of the day, there's only so much you can do with a 1,500 square foot box, if that's what it is, right? Like, there's only so much you can do inside. The floor plans really have been designed. We have had an opportunity to work with our builder relationships for the most part to give them feedback and say what's worked, what hasn't, what tenants want to see, what owners want to see. But a lot of the, options, that we would probably include in the offer stage would be above the normal builder specification. And we talked about in the last video that the deck, for example, is one of them. Some builders will include a deck in their base price, some don't. But at the end of the day, most of them, the standard spec is a treated lumber deck. We would certainly recommend upgrading that to composite decking material and aluminum railing, because that is substantially going to reduce your maintenance long term. And you're never going to have to paint it. There's going to be no slivers, and the cost to do it at this stage is just so marginal. You're not even going to notice it on your pro forma. Right?
No. But here's a point I'm going to get to is, guys, just imagine if you were buying a pre-sale condo in downtown Toronto. How much say would you have in it? Probably next to nothing. It's like, which unit do you want? And that's it. Floor plan A, B, or C. Done. Right? This, what I'm trying to get to is this has, first of all, it's had multiple iterations and multiple years of revisions of floor plans. And there are things you can do at this point to actually optimize and enhance the rental experience, the rental income, and also, most importantly, the tenant living experience at the same time. So there is some options we can do there, can we not?
Yeah, 100%. Again, some builders will allow us to do that. Some won't, but for the most part, all of our relationships will let us take those, I'll call it cost saving measures and time and management saving measures with some of the specifications.
Okay. So Let's say we've got an accepted offer. You've worked your magic and you went and negotiated the best possible deal. Now, you understand, you have a range typically. You're pretty close to what, because you've seen properties that have sold before and you know typically the range. You probably know the inventory position of some of the builders. And there is room to negotiate. There truly is. But don't expect it's not like lowball city here too, right? If you're expecting an absolute steal of something too, that might not happen.
We're probably a little late on that. There were some spec inventory out there where we were getting some amazing discounts.
I know somebody picked up a couple of those.
Yeah, you did actually. Yeah. But that's kind of dried up. The market certainly shifted here. The inventory shifted. And, but to answer that question, yes, we understand and every builder's different, right? So some of them are really selling, at a fast pace. Some of them, and have a lot of land position, right? Some of them are smaller builders, right? And that's fine. At the end of the day, we work with builders that, again, will work with us and make sure that the product that's delivered ultimately to the tenant is going to be what the tenant's going to want and going to pay maximum rental value for.
Okay, so got the contract, got some conditions. Is this the time when you would recommend somebody to hop on an airplane to come out and check things out at that time typically? Before removal of conditions.
Yes, at the tail end of that, Russ. So basically there's a lot of things that, and financing is the big one. We want to make sure that the documents get delivered to the broker right up front. We deliver them for people. We don't expect them to deliver it. We copy you on all the messages because we know what the mortgage broker, what they're going to want to present to the lender. So we make sure they get the package just the way they like it. And it just enrolls into our process where we can follow up with it. Again, there's going to be some subsidiary things with financing, like an appraisal and stuff like that we're going to have to handle. We'll make sure we coordinate that with the mortgage brokers as well and just keep you in the loop. So, again, who's holding the ball? It's all coming together for you. You go get capital. We'll take care of this side, right?
Yeah. Okay. So let's say we've negotiated, we've got it accepted. I've head out, I've gone to Edmonton, and Jason didn't offend me too much. As a matter of fact, it was just like, when you do realize and you meet him in person, he's just a big giant teddy bear. And I'm looking forward to go ahead with things. How does it handle from the lawyer's perspective of the closing of places?
Well, maybe let's, if I could back up a little bit on that. So once the conditions come off and you're happy, you've come to Edmonton, we've had time to maybe have an F-150 tour and look at your property and everything's good. You've met the people that you need to on this side. You've met the property manager. You've had a chance to meet the mortgage broker. You've met the insurance provider. So you're happy. Okay. You want to move forward. Conditions come off. At that point in time, we really go into a holding pattern. And what we do, because at that point in time, the builder has stuff to get ready. They typically go through a review. There's permitting that has to get done. And there is a little bit of a gap before construction actually starts. And that can be anywhere from a month to 3. And there's a lot of variables, again, with the municipality of getting permitting. Obviously, with this COVID environment, we've seen big delays with our municipality getting permits, and it's just pushed backwards. So once the stakeout or the foundation has been scheduled to be excavated, this is kind of our trigger point to get on the radar. Once we get to that point, we do frequent visits. We do bi-weekly visits to the property, and we just take photos. If it's still under construction and there's machinery there, we're not going to get out and get up, onto the framing and stuff like that. But once it gets to a lockup stage, we can start walking the inside. All we're trying to do, Russ, is just keep people in the loop, right? And we're keeping people in the loop, and they can see the progress, and they know that, everything that they've signed up for is starting to fall into place. Yeah,
and you do a lot of those things. You've many a times have taken pictures. You keep the client in the loop of the build process, things like that. Now, here's the thing, guys. I'm going to use that example I used earlier of somebody from Victoria. And this is applicable across the country, guys. Wherever you're buying, remember, if you're in Victoria and you're buying Kitchener, Waterloo, Cambridge, make sure that the person that you're acquiring the asset from does all this details for you, right? That's the key thing, is that they don't just, sell you something and, sayonara, Auntie Laura, if you will, right? They're part of the process with you.
Russ, they have to understand that process, because if they don't, you might as well just stumble through it yourself. And then, quite frankly, you get too many cooks in the kitchen, and you have to have one, defined process that can keep the whole thing accountable. And it's not accountable; it's accountable for several relationships, because there's a builder relationship, there's an investor, there's tri-urban, there's mortgage brokers, there's property managers, there's insurance providers. There's a lot of things, that have to come across the finish line at the same time.
Yep.
And our system is developed to manage that process in a nice airtight manner. Yep. Right.
Okay, so we're now at the phase where the builders are doing what they do best, and they're building us our house. Okay. Yep. And we're still, now, how does the money work, Jay, along the process? So typically it's like it's a small deposit, and there's usually an additional deposit at condition removal. And is there money along the way? Like, how is the money flow work during this process?
Yeah, well, there's a couple options to that, but the typical process that we, that we see, Russ, is, we always submit a small deposit with the offer, and that's $1,000, and I will gather that up front from the investors. It goes into our trust account here, and that's really all we need to get rolling. When the conditions come off, when we have the financing approval, when we've had a chance to look at the build plans, the plot plans, you've got all the information, you may have come to Edmonton, met the relationships, and you're happy. Conditions come off. This is where typically a 5% deposit is due. Some will ask for more, but typically our relationships are good with a 5% deposit. So, for example, in a suited home, or say the grad suite model is going to be right around $535,000. It's going to be roughly $26,000. Now, that is your financial commitment, period. If we're taking a completion mortgage, where the mortgage will fund at completion, you have no further capital requirements until probably about 2 weeks prior to closing, where you will distribute the balance of the closing proceeds will go to your lawyer and then go to the seller's lawyer, the builder's lawyer, through that process.
Yep. Now, I should have probably asked this during the mortgage portion, but does Mike, the mortgage broker you use, is he able to get rate holds and get financing committed to something that's potentially 9 months in advance?
Well, boy, that's a loaded question, and that's something we should get Mike on maybe one of these calls, and that's a great question, because there are differences between a completion mortgage and what we'd call a draw or construction mortgage. And they should be utilized depending on your financial situation. And the banks will, based on experience, could requalify you in a completion mortgage. So if you think your financial situation is going to change a year down the road, maybe you should look, at a draw mortgage, where typically the mortgage approval is, signed, sealed, and delivered up front, not revisited throughout that process, right? If you're confident in your financial situation isn't going to change, by far the easiest probably is to do a completion mortgage and let the builder take the construction mortgage, and you just get your mortgage at the tail end.
Yeah. But the big message there is provide your mortgage professional all the information up front about what your situation is, and he'll determine which is the best. And the other part is to work with somebody who's done a few of these, right? Not any mortgage broker, your bank person, and you're going to say you're doing what and where and what are you looking at? They'll look at you like you have three heads.
Well, again, it's having that relationship that has, experience in doing this, Russ. Yep. A lot of experience. It's, trying to pick the best in the business, so to speak, yep, to get on our investors team, right?
No, I hear you. All right, so it's going forward. Time to close. Now, imagine in the meantime we've been introduced to our property manager or into property managers, and you've given a selection of people to go interview. Like, how do you handle that part?
Yeah, so that's exactly right. I mean, I've always said it's about the relationship. So each of our property manager relationships all have their own little specialty of not only area, but property type that they like to manage. So, we'll give you 2 or 3 numbers and say, okay, here's so-and-so, and here's 3 numbers. I really suggest contact every one of them. They all do the same thing. They all have a little bit different fee structure and how they manage that side of it. But really, I would recommend just going with that personality, / company that is going to fit with you and your personality and what you're trying to achieve. Because let's face it, the real estate and the property management is a performance-based business. And, if tenants are in there and it's producing cash flow and everyone's happy, it's a really, really easy relationship to have. On the flip side to that, if there's trouble with vacancies or, tenant turnover or midnight moves or, stuff like that, you got to have a property manager that can maneuver. And I'm sure they've all seen those circumstances, Russ.
Yep.
But these are some questions that you're going to want to ask up front. That what happens if my tenant's late on rent? What's your procedure? And hear it from them how they would handle it. And what happens if my tenant does a midnight move? What happens if my tenant gets a dog and I don't know about it? These are all good questions to ask up front.
Yep, I'm hearing another recording episode of just you and I have a conversation about property management, working with a manager or self-managing. With that, and I know you have a lot of experience. We both have a lot of experience on that. And we honestly, I know we've been going for, maybe about 30 or 40 minutes now. We could go for another 3 hours on that one topic alone. Could we not, Jay?
We might have to break this one up. Yeah. It's, but again, it's just experience. It's an opinion, guys. Do with it what you want. Like it, love it, hate it. It's not I've got pretty thick skin. It's okay. But at the end of the day, this is experience that has happened, in my world over the course of 20 years. And not only at a personal level, I've seen many, many customers go through experience as well. And, again, it's just sharing that.
Yep. And you have, you care, and I'm going to try and phrase this as a question. You really truly do care about the client experience because it is a lifelong experience, because you're going to see them potentially when you want to sell it and things like that. And you also take a responsibility when you make a recommendation that the person you refer people to is a referral, as a recommendation, a reflection back on you at the same time. Is that not, that's correct?
It's a positive reflection or guilty by association kind of situation,
because
right? And
most people, if they're having a bad experience with something, who do they typically go to? They typically come to you, right?
Yeah, it's I'm usually one of the first phone calls. And listen, I'm not going to sugarcoat it, not say, no one is not going to have a negative experience. It happens. It's the real estate world. Yep. Shit happens, right? But, at the end of the day, if we know about it and, if it's a common occurrence or a one-off, that's something we want to understand. And if we need to, maneuver our relationships, let's face it, we all got busy lives. We all change within our lives, and circumstances happen, and people in business change over time. We have to adapt, and we have to stay in front of that,
yep.
To make sure. And Russ, I think you know me, and I think that's just my personality is, I like to knock it out of the park for people, and I want people happy. And you're right. I do care. And it's not just about, the acquisition of the property. It's when they get the property and, you connect with them a couple months later and you find out that, hey, we've got everything rented and cash flow is coming. And those are great conversations to have.
Yep.
Right. When everything fell into place just the way it should have.
Yep. Understand. So I know, guys, just a quick check in here. We did commit to doing 3 phases: an acquisitions, an ownership, and an exit of this conversation. So I'm going to pull an audible. Sorry for a sports reference, but I'm going to make a change of play at the line of scrimmage here. We're going to postpone our ownership conversation, Jay, that we can focus 100% on that into working with a manager and also self-manage, and we'll have that conversation. Are you okay with that?
Russ, I think that's a great idea because that's just a whole nother conversation.
Yeah,
right?
that in and of itself is a series of itself, and I don't want to gloss over it and leave people feeling, geez, that was what I wanted. We'll make a commitment and we will have that conversation. But before we do sign off here, Jay, I do want to touch on if I'm ever going to sell a place and I'm an out-of-town investor. Okay. Mm-hmm. If I'm divesting of an asset, what's the process kind of that? And interesting to know, guys, I'm doing that right now. I'm selling some of my older properties and I'm reinvesting into newer properties. And exactly what I'm teaching you guys is what I'm doing. Right. So, So you're not going to sit there and go, well, Russ, all you do is recommend this. No, I'm recommending it because I'm doing it myself. Okay. Mm-hmm. So what's the process if I wanted to sell a property I've owned for, say, 15 to 20 years?
Well, and this is probably another video segment, but this is something where we need to get on the radar as soon as possible. And I would say there's two things we're going to have to keep an eye on. One is your mortgage date of when your mortgage term expiry is, and the other one is your lease expiry, right? We're investors. These are typically investment properties. They have tenants in them, and ultimately it's going to boil down to numbers and making sure we're maximizing your closing proceeds. So if we know when the mortgage term payout is, and if it's too far in advance, we need to get a hold of the lender, and we need to find out what the payout penalty is. If we're going to be faced with a 3 months interest penalty, or if we're going to be faced with an interest rate differential. And trust me, there can be a huge difference in numbers there, big time, right? The lease part, we're just trying to coordinate that for our timing on this end. So for example, right now, we're going to be sending out some information this fall, and we're going to be asking people, because we're getting to that time in marketplace in Edmonton where people, it's going to be time to put up for sale signs. Russ, you're already starting to do it. There's been a crazy summer market here for housing, and we're seeing some multiple offers and stuff. Long story short is we need to get that on the radar this fall for properties that are going to be expiring into the new year. Now, once that tenant leaves, we'll go in and do an assessment of the property and take a bunch of photos, send you photos, and this is where we need to get it dolled up. Now, if it's a suited home or a property that would be very investor focused, like a suited home or a garage suite or something like that, we've got the opportunity to actually keep tenants in place and start marketing this thing beforehand. We've got investors coming all the time. How easy is it for them just to buy a property that's got tenants in it, under management, and it's just really talk about a turnkey opportunity. Yeah. If it's a property that's, a single family home, like an older townhome or half duplex or a single family home, those we tend to recommend putting those into the open marketplace. And to do that, yes, we have to terminate the tenancy or wait till it's done, and we'll come in and do an assessment on it. And we're going to get it all dolled up and clean and get the marketing in place to advertise to that new home buyer market. Yeah. Because Russ, that is a huge market segment. Investor sales are a really small segment of the marketplace. And that entry-level home buyer market for these single-family homes is a massive market at the retail level. Yep. So in a lot of cases, we can ask more money for it.
Now, I'm sorry if I had a little, for those of you listening on the podcast, you wouldn't have seen my little smirk when Jason was talking about at the end of the tenancy, we just don't renew. This is Alberta, and Alberta, the landlord can choose at the end of the term not to renew a lease with somebody. Right. Jace, do you know that doesn't happen? That doesn't happen in many jurisdictions. It's actually the end of the term. It's the many jurisdictions. The tenant is the one that makes that decision.
Good to know.
So, so really, and we actually sit there and we strategically line up the ending of our terms. Like, for example, you can have your terms start ending in the Februaries and Marches of that. You have and then you don't renew the lease with the tenant. Let's say it ends end of February, and then you have the month of March to get it all spruced up if you need to do some work, and you got it on the marketplace for spring market. I know this was a little different spring market this year, but you can strategically line up your tenancies if you know you're planning to exit.
If anyone's planning that, Russ, I would highly recommend, just timing wise, and it happens every year in Edmonton because geographically where we're located with old man winter and springtime and stuff, of having the tenancies expire at the end of January in the new year. And that gives us, February. We really would ultimately like to have the listing hit the market, in February when we get that first, warm chinook blowing in at Edmonton, and it's +7 and the water's running and the sun's shining. And you got to understand what else happens in Edmonton at that time of year. We have the boat and sportsman show and the motorcycle show and, the RV show. So the home and garden show. So these all happen at the end of January, early February here. So it just gets the mindset of people wanting to get into spring mode, and hey, buying a house is part of that, right?
You forgot to mention the mosquito show that comes, that's
the mosquito show. Yeah, exactly. The mosquito repellent show.
That's the air show.
Yeah, exactly.
No, so guys, here's I'm going to give you guys. I hope you guys caught that. That comes from experience and wisdom. And Jason, sorry if I'm really pumping your tires here and telling everybody you should use you, but that's the kind of strategic planning that you do for your clients, as opposed to just a realtor. Should I sell? Yeah, sell right now, always sell or always buy, right? And all they do is they stick a sign up and away you go. You actually have some thought into this because you're an investor and you specialize with investor clients.
It's about the bottom line, Russ. Yeah. It's yes, the relationship, but as an investor, these people are buying as part of a financial plan. And you know what? If we can maximize them an extra $5,000 or $10,000 or $15,000 by just being a little proactive in our timing, in the release of the listing and the preparation of the listing, I think that's what needs to happen, right? Okay. Yeah, and people appreciate it, right?
100%. So let's just, and I'm just using this as an example of one of the places I'm doing right now. So after tenant said leaves, I had a conversation with a joint venture partner, and they were in their mid 70s, and they were wanting to sell. Okay, no problem. So then what's the process we went through, Jason, or that you went through to determine what the course of action that we were to take?
Well, first step is obviously a tour through the property. So we get keys from the property manager and we'll tour the property. So at that point in time, we're just getting information. Russ, I'm looking for, repairs. What's this thing going to cost to get back up to, a sellable piece? Now that sellable piece to me kind of comes in three different waves. It comes in as is fashion. Maybe run the broom over it, and that's what it is. You can do some cosmetics to kind of bring it up to a mediocre listing, I'll call it. And then, there's the high-end market, a renovated market, right? And if you're looking on the back side of this, and if you're looking in today's marketplace, there's a fairly big gap between the low end of the market and the actual renovated stuff that's sitting up there. So in a lot of cases, it's worth the effort to put the money into it and get it up to a high-end marketplace in that segment. The other thing on that note is, a lot of those mediocre listings or lower end listings, they get put on the market and they either take forever to sell. And when they do get an offer, they maybe attract a lowball offer, right? There's vultures out there and guys wanting great deals, and these are the people you're going to chase. And if you really look at the back side of this, Russ, and you look at the buyer who's going to be buying this, in most cases, like your townhome, for example, we're going to raise value of it probably by $40,000 by spending 25 on it, right? But if you look at it at the end of the day, and let's just say the property value is $200,000, the people that are going to be buying that are going to be probably a first-time home buyer or an entry-level buyer. These people are going to be coming up with 5% down payment, kicking and scratching to come up with 5% down payment. And if they buy something low-end at $150 versus something renovated at $200,000, the difference of their 5% down payment to have $25,000 worth of renovations is peanuts. Yep. So this is where people are opting to go into a renovated property, and they're willing to pay for it for that convenience of just having it done for them and included in their mortgage and down payment.
Yeah, a lot of people won't come in and do the work, even though you can justify it. Like what we did in this exact analysis, I'll even give you the numbers, is Jason went in, took all the pictures, we looked at it, we essentially identified 3 different options. We could do it as is, which would cost zero money, and here's what you potentially would get for it. And let's say it was $160. You could spend about $9,000, clean up, do this, that, or that, and you could probably only get, maybe about $169, maybe $175, give or take. But if you actually go and you spend and you get the new kitchen, you get the new bathroom, you get that done, and it's about just under $25,000, the listings were showing that it would sell for right around the $200. Okay. So it made sense for us to go with the $25,000 package because we would get that back and we'd get a quicker sale and we could just move on with it. Right. But you presented me with those options, did you not?
Yeah, I mean, I've got the information. I'm the eyes and the ears and the boots on the ground here. So it's not, again, rocket science. It's a walk through the property. It's making a nice detailed list of the repairs that need to be done, and then just scheduling it into those 3 categories and saying, okay. And then what we do is we look at the actual market side. Okay, Russ, if you were to do this option, it's going to be worth this. If you're to do this option, this. And if you do this, we're going to list it for this. Yep. And based on that, we can say, okay, in each of these segments, we can actually look at the percentage of sale to list price and say, well, chances are you're going to get this for a sale price, and it's going to take this long. And really it's all the information that you need, Russ, to pull the trigger.
Well, don't get me wrong. As you know, Jay, kicking and screaming to write that check. I would have much rather spent zero and get the highest price possible. But the unfortunate thing is that we had to spend that money to get that price, right? And that's just the way it is. Especially if you own real estate. If you own properties, guys, here's one of the things that a lot of people don't consider. If you own a piece of real estate for 15, 20, 25 years, you will have to probably write those kind of checks towards the end by the time you want to sell it, if you have it as a rental property. You get very rare that you have. I actually have one place. You would know the place in St. Albert. The tenant, I've owned it. How long have I owned it? 13 years, and the tenant was probably
2006,
there. 14 years. Yeah, 14 years. And the tenant was probably there 10 years before that. And we have not had to put anything into it at all. And it was one of the cleanest places that we owned still. I know it's dated. It's completely dated, but at the same time, it's rare, but it does happen.
Russ, if you look at the numbers in that area, though, versus unrenovated versus renovated, the gap, I guess, that we talk about, again, I don't make any money off renovations. I'll certainly recommend and help you with, contractors that can reel this all together, for us and keep us in the loop. But it's in your best interest financially to, I call it cycle the money, because you're going to have to put it in, but you'll get it back out in the sale proceeds. And throughout doing that, you should create yourself extra value in your sale proceeds. And probably most importantly, when people want to sell. So there's a big difference between listing a property and having it float around for 6 months in a listing, versus, putting a nice listing up and getting an offer in the first 14 days.
Yeah. Yeah. Now, we've had some properties that have been like that on the good side, but we've also had some sock destroyers at the same time too. And Jason, you would know what a sock destroyer is. So tell me what a sock destroyer is.
Okay. A sock destroyer is a property where, I go in and do an evaluation. And in the first case, I probably shouldn't even took my shoes off, but to be courteous, I did. I got to throw my socks away before I can get back in my truck.
And Jason and we had a running joke that for Christmas for a few years, I bought Jason a Costco pack of socks.
Socks, yeah. Yeah, duly so too.
And you're sitting there, and there's been some times where we've toured some properties. And guys, we're not trying to scare anybody out or freak anybody out, but there was times of going, I'm not touching that door. Not like, how do we leave? I'm not touching that door. Not you, right?
Well, the good news is, Russ, we don't go anywhere as close to those properties, and they're on transition out the door. But there's just and I'm probably there's just nothing I haven't seen. Yeah, it's people sometimes are strange creatures. Tenants are strange creatures, and you just I'm never cease to be amazed at some of the things I walk into. But
it's now of a point where, so from that extreme to some of the newer places I now own, I would be proud if I was coming to town and I said if I had a vacancy, I would bring my sleeping bag and I would stay there. Like, I would be proud to stay there because they're in great condition. They're nice. They're something you would be proud to tell people you owned.
Yep. I mean, that's just, again, the course of the learning and moving towards the new construction product, Russ. It just works better. It not only works better as a lifestyle management and incorporating into people's lives, it works long-term on financial statements, and we've got the financial statements to prove it. We still have some older ones and we've got some newer ones, and those newer ones, there's just, every year that goes by, we're able to take cumulative cash flow from the year and put it on mortgages. And we're not having to put it towards, either tenant turnover costs or repairs. It's just, they're very, very efficient to own. And I think you can utilize the cash flow again for more important things like mortgage principal reduction.
Yeah. And here's the thing is it's one of those things that we could sit here and we could tell you all about it from experience of owning it. It's one of those things you have to actually own them to experience it, and you would understand it. Like, it is a different experience owning them. So
yeah, and you know what, Russ, on that note, if anyone is interested, I mean, we've got several customers and investor clients Canada wide that have opted into the new construction, and I know a lot of them would be more than happy to give you an unbiased opinion of their experience. And again, I think a lot of the people that are coming and our customers, they're, I'll use the term one big family. We're kind of all here to help one another, and I'm sure people would be willing and glad to share their experience.
Yep. Absolutely. And, don't just take my word for it. I don't have a dog in the hunt here. The dog I have in the hunt is I make a commitment to anybody who wants to be part of my audience, to follow me. I make a commitment to do what's right for you guys and share what is working, share to have a good experience of this. And it's not going to be sunshine and roses and unicorn farts. It's going to be a little bit of ups and downs, and it's going to be some challenging times. But this is stuff that I wish I had known back in the day when I got started, and or buying places or even transition. And I had a conversation with somebody today, and the conversation went something like this: goes, look, I'm 20 years into this, and I feel like I'm just getting started because of the impact and the depth and the reach that I have of goals and the vision that I have for my own business, and the depth and the goal and the reach I have for inspiring real estate investors. I honestly feel like 20 years in, and I'm just getting started because I've got so much more to give and contribute. And I've been tired of playing small. It's time to step up. It truly is time to step up and make a bigger difference in this world. So that's sorry, I'll get off my soapbox here for a second. But
yeah, nicely done.
And Jay, would you like to leave anybody with some final inspiring words, or maybe some first of all, contact information if somebody wants to reach out to you, and maybe some final inspiring words before we sign off?
Sure. If anyone is interested, I mean, this is not for everyone. Real estate investing is not for everyone. Investing long distance is a big hurdle in a lot of cases to overcome. But if it is of interest to you, reach out. I am a no pressure tactic guy. I'll give you the information you need. I'll have a conversation with you, and I'll explain in a little bit more detail. I guess we went over a lot of the process that we go through today. We didn't get to the closing part of it, but you know what? Reach out. You can connect with me via email is easy, jason@tryurban.com, or even go to my website. It's tryurban.com. And you know what? It starts with a conversation, and we'll see where it goes from there.
Yep. All right, guys. So why don't we just leave it there? And guys, make sure that you subscribe, follow along for any time we have these conversations coming out. Okay, everybody. Bye for now. Hey, guys. How's it going? So what did you think? Wasn't that a wonderful conversation that we had, talking about the ins and the outs and the how-tos of investing in out-of-town markets? Now, this is a deep topic, and we talked a lot about the foundation and fundamentals, and I know as deep as we went, there is still another level deeper that you can go into this conversation. So as mentioned a couple times in the video, if you are interested in the Edmonton marketplace, and maybe you want to have a conversation with Jason, who is a fantastic resource and an education source, and most importantly, he is a property source. He is one of the best that I know in Edmonton that understands real estate investors that can find you an opportunity. So wherever you're watching this, wherever around this video you're watching it, there should be a link. And all you have to do is, if you just hit the link, all it will do is it will take you to a page. All you have to do is fill out if you're interested in maybe finding and looking at a property, and maybe if you have an idea about what type of property you want to look at. And even if you don't have any idea, there's an option for I don't know. And then Jason will set up an appointment with you and walk you through a diagnostic and see if this is a fit for you. Make sure you hit that bell notification button, subscribe, because there are more videos just like this upcoming. Honest to goodness, guys, we're just getting revved up and we're just getting started. There is so much more content to come. So if you aren't subscribed, what are you waiting for? Hit the like button, hit the subscribe button, hit the bell notification, and you will be on the list. And remember, in every encounter you have with another person, always make sure you leave them feeling inspired, encouraged, and you come from a place of love. Bye for now, everybody.